All right, guys, CPI just came out this morning. Overall, inflation was down. Mo's going to go over it in just a few seconds. But to start, pre-market, stocks just skyrocketed upon hearing the news. And now they're back down a little bit, but the NASDAQ was up 1.1 or 1.2 pre-market.
Now the NASDAQ is up 0.2%.
Yeah, it was actually 0.05 at one point.
Wow.
Yeah, so, again, these are short-term blips. You got to remember from our channel, if you're new to the channel, sign up, subscribe to the channel, because we don't look at individual news and make major changes in our investment based on them. We never do. If inflation was going to be 10% for the next 2 or 3 years, I'm really not going to change the way in which I invest. Now, do I think there are repercussions based on that? Absolutely. Absolutely. The only thing actually that, come to think of it, if I knew inflation was going to be 10% a year for the next 3 or 4 years, I'd probably buy a ton more real estate today.
Yeah.
That's what I'd do different.
So it's funny. Somebody on the morning show for the past couple of weeks has been arguing and saying, how do you not factor inflation into what you're doing long term? And I was like, it just doesn't make sense to.
No.
It makes sense to, but it doesn't make sense to saying, okay, inflation is very high right now, and therefore a company that I'm looking at 20 years,
bam.
What are you doing?
Why would you factor in short-term inflation in a long-term analysis? What that person's really saying is, I only care about the short run of my investments.
And if I cared about the short run, absolutely, I would have to factor it in.
Yeah, exactly. But we're not doing that. We're here to buy companies for 10, 20, 30 years at a time. Yeah. That's why when you watch our videos and you see our stock analyzer tool, our analysis, Mo does 10 years, I do 20. That's the reason why.
Yeah.
That's it. And I know, by the way, 15, 20 years ago, I was the same way. This affects this. No, there's hundreds of thousands of data points.
There are.
To sit there and focus on the 1 or 2 that happen every week, we just giggle about it. Our joke every day is, the market's up. Why is it up? What point the market's down? Why is it down? It's just a joke we do because it's all gibberish. In the long run, stocks are a weighing machine. So the fundamentals behind them and valuations are going to drive the long-term value. So Mo, why don't you go over the CPI report and tell everyone what happened?
Right, so CPI came in, it rose 0.1% for the month against the expectation of 0.2, and 5% from a year ago versus the estimate of 5.1. So people were happy about that.
Yeah.
Now when you strip out food and energy and look at core, that was increased 0.4, 5.6 annually. Met expectations, didn't get better. Didn't come lower. People are not very happy about that.
The Fed focuses, they say, a lot on the core CPI.
Exactly.
And they were hoping for a bigger drop. Now remember, unemployment came out this week and it was lower, which is not a good thing for inflation.
Right.
Remember, when you want to unfortunately, if you remember our Jerome Powell video from when he was testifying in Congress, these people on the board committee were like, you're terrible, you're going to cause 2 million people to lose their jobs. And his comment was, well, yeah, but it's better than having 100 million families affected by inflation, because inflation affects everyone.
Right.
It affects some people less than others, but it affects everyone. And so their goal is to drive up that unemployment number. They don't want 3.5%. That is inflationary.
Right.
So Mo, go ahead.
So this is the breakdown from the Bureau of Labor Statistics.
Oh, one more thing.
Yes, go ahead.
The other help to inflation was March of last year dropped off, and that was a big inflation number. Yeah. So it's going to help this number drive. It's going to help this annualized number drop down significantly. Go ahead.
So when you look at food, there's really no change. The big changes were energy came down 4.6%. I feel like a newscaster.
What happened here?
Whoa.
All of a sudden, NASDAQ fell. Okay, go ahead.
And you know what's funny? When I saw the market open today and it flussed, and it came up and then it came down, and I was watching futures as I was doing the morning show. And I think a lot of it has to go with what the Fed is going to release in their minutes this afternoon. People were so confused. They're like, should we react to this? Should we react to this? Or should we wait till this afternoon? Do we react? What do we do? That's kind of like what I was thinking was happening. And
you might be right.
I think we're seeing it right now.
Yeah.
People don't know what to do. That's why I texted you this morning. I was like, if we start shorting, maybe everybody else will start following. And we can get a big day of red.
Yeah. We'll wait till we have 5 million subscribers before you try to start moving markets.
Exactly.
That was a joke for everyone at the SEC.
Including the SEC, FBI, just in case you get involved. Anything like that, I was joking. Let's see, electricity came down. So energy did come down. New vehicles, however, this is something people were talking about. That was increased. Transportation is up. But
used cars and trucks, look at those prices, down 11%.
11%.
Year over year, by the way.
Yes. Medical services fell. So that's kind of the big thing. These are the two that people are talking about, transportation and medical services.
Why were they talking about that?
Transportation is up, still higher, airplanes, and everything is going back to labor costs. And medical, I mean, that was high for quite some time and sticky for quite some time.
Yeah. So guys, again, we have to repeat this over and over. We do news daily. We do the morning show daily. We talk about the news. We do earnings seasons coming up. We're going to do reports on companies. But remember, the only reason we watch this is to see if there's some fundamental long-term shift in the economy or in an individual company. Now, somebody might make the argument, well, inflation is no, it's really not a long-term shift.
Not in the grand scheme of things.
If all of a sudden inflation went to 20% tomorrow, do you know how high they would put interest rates to fight that?
They might raise interest rates 10% in one day just to bring it down.
That would be incredible.
The world would shatter.
But that's the thing, guys.
The media would melt.
And guess what we would do? We would buy a lot of stocks. We'd be like, super, let's go buy a lot of stocks because stocks are cheap. That's what we want to relay on this channel. If this makes sense to you, if worrying about the day-to-day grind of what's going on in the news bothers you, we're the channel for you. You need to subscribe because the goal here is to remember that on any given day, there are tens of thousands, hundreds of thousands of data points that you can sit there and affect your decisions in investing. But the key really is valuation. And your valuations should change if something major and fundamental changes in the company.
Yeah.
Like if all of a sudden, so what's shifted lately? For example, subscriptions become a much more relevant, a much more prominent part of people's businesses. Apple's doing it, Microsoft did it well. That was a higher gross margin business.
Right.
That to me was like, okay, I should increase my profit margin for some of these companies based on that. That to me was a shift to the positive, right? If you look at companies like Amazon with AWS, it was killing it 10 years ago because there was nobody else in the game.
They were the only game in town.
Now there's a lot of people doing it. Alibaba does it. Google, Microsoft, everybody does it. These are the things we talk about. We sit there and say, listen, on any given day, any given month, any given year, stocks are a voting machine. The most popular ones are going to go up, least popular ones are going to go down. Over the long haul, the fundamentals matter. What is the company worth intrinsically over a long period of time? I just read a quote about Charlie Munger. I shared it with you and Dalton where I said, Charlie Munger says, I don't use any equations to figure out my intrinsic value. Can you, like we use stock analyzer tool as a way of saying, where are we?
Yeah.
He just sits there and goes, but then he said, but when I saw Costco at 12 or 13 times earnings with their return on invested capital, how great they are with customers, I'm like, yeah, this is a buy.
Yeah.
Right?
Yeah.
And I'm quite sure Costco currently at $40 or whatever it's at, 35 PE or 40 PE, probably doesn't make much sense. That's the way he looks at things. That's the way we want you to look at things. Is this company temporarily being affected to the positive or negative?
36.5 PE.
36.5 PE in the last year, 47 over the last 5 years.
Yep.
This is the better way of being. It allows you to sleep better at night. It allows you to, and of course, everybody wants to react to the news. You know, other YouTube finance people do a lot of things about the news, but they use it as a way of putting fear or excitement in you. We just sit there and say, hey, like, look at the CPI here. Have you heard any fear from us about the CPI?
No, and it was funny when I was opening the show this morning, there was a lot of people talking about CPI, and I'm just like, man, I can't wait to get this 5 minutes over with because I'm just going to say it because I kind of have to, and I don't care about it. Yeah,
the only reason I care about it is, I'm not going to talk, I don't want to be selfish. I was hoping CPI came in higher.
Same.
Because I look at stock market valuations right now, and I look at where we stand, and we are 68% overvalued based on history going back to 1929 and my stock market to GDP ratio. Okay? Every day, I report this ratio in our chat. So I'll go to the stock market to GDP ratio, and today, it's 68.7. We got as low as like 57 or something like that late last year because stocks had fallen a ton. Guys, it's overpriced. Does that mean you shouldn't buy? No. Still look for good value and still dollar cost average because you don't know how long these can last.
Right. There's good companies out there right now.
Yeah, listen.
At very fair values.
And we're surprised by that, and we have positions.
The hard part is, how much do you buy now, knowing that more likely than not, they're going to start to fall, and then you dollar cost average.
You'll never pick the bottom perfectly, and you'll never sell at the top.
Yep.
The goal is, as stock price goes down in a company that you believe is selling below intrinsic value, you buy. And the reason GDP matters is it drives up the value of the stock market to GDP ratio. All right. So guys, again, if you like this, if you want a calmer way of being where you look at the bigger picture and make better decisions that way, subscribe to our channel. We really appreciate it. Watch our next videos. Thank you very much for your time.